In today's video, I'm excited to introduce Heliostar Metals, which we can find on the TSX Venture under HSTR, or in America under HSTXF. And this one is interesting because right now the stock has a PE ratio, or a price to earnings ratio, of 12, which means they're currently profitable and they want to increase their production by almost 10x, if not more. Heliostar aims to be a premier precious metals growth company, producing more than 500,000 ounces of gold per year, building mines in the 100,000 to 250,000 ounces of production space has been advocated by the major mining companies. They basically want to step in and produce the mines the companies like Newmont and Barrick have walked away from. And that's exactly the space where you can grow a small company into a much larger one. Gold deposits regularly grow larger, and working in this space is a proven pathway to building a multi-billion-dollar business. Charles Funk, CEO. So we can see here that the company is planning to expand their current portfolio. Right now, they have 2 gold-producing mines. We can look at those right now. They got one here in Durango, which is San Agustin, and right now it produces 30,000 to 32.7 thousand gold ounces per year, with an all-in sustainable cost of $2,150 to $2,250. And we can see exactly where it's located here. There's a lot of really good information on their website. I will leave a link for you in the description. We can see their internal rate of return. We can see their annual production. We can see their nameplate capacity, their reserve grade, etc. Their payback is roughly 0.2 years. Net present value, $35 million. We can look at their second asset, and this is where the story gets a little bit better. We can see that the all-in sustainability cost is roughly $1,775 to $1,875. They own it 100%. It's currently got reserves in gold ounces of 376,000, and they currently produce between 20 and 22.3 thousand. So starting from their first asset here, we can see that 2150 to 2250, going down to 1775 to 1875. And then if we look here to the gold price, this is notable because the gold price, after it broke out, well, it's had a pretty big move. This is roughly the breakout area where what used to be resistance or the previous all-time highs, well, clearly it's broken out. We can see right now we're trading at about $4,000. So as their current mines are producing, again, at roughly 18 to 1900 and roughly 2150 to 2250, the company is currently profitable. That's why they have a PE ratio. And then if they bring on their other mines, notably here, their flagship asset is going to be the Ana Paula project, targeting a 2028 production. So if now we pop over to this mine over here, the Ana Paula one, this is also 100% owned by the company. It's also in Mexico. If we go further down here, this is where they tell us some numbers. The company has acquired the project in 2023 for $10 million in cash from Argonaut Gold. Previous operators invested more than $100 million. So this kind of looks like a bargain if there are the ounces in the ground they think there are. Jumping down here, let's just have a look and see. I was looking for the specific number about the all-in cost. So let's just go through here and see if we can find it. We can see the total inferred number of ounces they have. It's an underground mine. Let's just keep going down. I'll come back up in a second. Here we go. This translates. Oh, oopsies. This translates into cash costs of $923 per ounce and an all-in sustainable cost of roughly $1,000, $1,011 on average over the 9-year mine life. So that's a pretty nice little cost decrease. And I say that because, as we just reviewed, the gold price right now is at roughly 4,000, and their existing mines are at roughly 1775 to 1875 and 2150 to 2250. So what this looks like to me is that they got a bargain of an asset. And let's just read the companies who are currently operating in the area. I think I saw one here. So let me just go back up. I think it was in this section here. Let me find it. So the saying is location, location, location. And Ana Paula is in Guerrero state, halfway between Mexico City and the port of Acapulco. It is the 4th home driven for the Mexico City International Airport along a paved public highway and regional roads. which is important because finding a mine is one thing, but getting it to market is another. We can see here that the region hosts several active mines, including Torex Gold. We got Equinox Gold, and Morelos is one of the 10 largest gold mines in the world by annual gold production. So this is in the gold belt over in Mexico. So Ana Paula is going to become their new flagship asset. We can also go to their investor page and see their reserves and resources. Well, they're pretty good. We can see their probable reserves here. We can see the tons at 25.5 thousand. We can also see the gold grade, 0.5 grams per ton. We can see their current resources in terms of Ana Paula, which is going to become their new flagship asset, and it should really reduce their all-in sustainability cost. We can also see their total indicated and total indicated and indicated, which means they have a lot of potential ounces in the ground here to go pull out. And when we go to their homepage, again, they tell us that they want to start producing hundreds of thousands of ounces per year, or to roughly 10x between where they are right now and ultimately where they plan to go. So now let's go have a look at their investor deck because there's some really good insight in here as well. So again, I encourage you to read the cautionary statements or click on the link in the description and make sure that this investment opportunity matches your personal goals. Heliostar aims to be a premier precious metals growth company, producing more than 500,000 ounces by the end of the year. Again, producing the mines that some have basically walked away from or are not interested in. So when they invest $100 million into a mine, meaning the previous operators, and they're able to acquire for $10 million, if ultimately there are ounces in the ground that they can pull out, that could be a really good deal. So right now, and again, to make it simple, we can see that they've got their first mine in production right now, which is the La Colorada mine. That's 2026 cutback. We can see the 2026 cash flow driver is currently San Agustin Mine, and that's the one we reviewed before. Ana Paula is currently looking for production in the second half of 2028. They got a recent P, shows expansion in economics, and the first half of 2027 for their feasibility study. And then they've got 2026 progression permitting for Cerro del Gallo, which is another one of their assets. And then they got a fifth one here, which is Gold Strike. This one here is an antimony ridge exploration. So there's a lot of assets in their portfolio. And what's really important here is that this appears like it is a profitable company that wants to reinvest for the future. That's much different than, again, going to start with nothing and trying to produce something. So this looks pretty good. Looking here to their production potential, where we are right now in 2026, we can see where they want to go in 2027. And we can see here that by the end of 2030, they want to get to 300,000 ounces. So I'm just noting that there's two numbers that are conflicting here, where it says 500,000 by the end of 2030, and then 300,000 by the end of 2030. So if in doubt, I would probably defer to the lower number. So let's call it 300,000 right now. We can see that right now in 2026, they're producing 50 to 55,000. And they mentioned roughly 10xing from here to where they are. So call it $300,000 to $500,000, depending on which chart you look at. Their Q1 for 2026 results, we can see them right here. We can see that just looking at the legend, we can see that they've currently increased their working capital to $70 million from $40 million in December 31st of last year, which basically means that they're able to add more cash to their balance sheet. They have a net income of $14.1 million or 5 cents a share. When the stock is currently trading at $1.57, that's pretty strong. Remember, a quarter times 4 equals your annual production. And that's how you derive the price to earnings ratio. So let's go back to the slides here. They've completed their stockpile mining at La Colorada and successfully restarted production at San Agustin in late January. Consolidated all-in sustainability cost right now is just under $2,000 per ounce, which is roughly half of the current gold spot price. And they currently have guidance. You can see it right here if you want to pause. And we can go to their capitalization, noting that they have some pretty big investors, including Eric Sprott, Franklin Templeton, and Adrian Day. They also have analyst coverage, and you can go look at those individual reports if you go to those companies' websites. We can also see they have a really important community investment, employment, procurement, and water, because those are all important things when it comes to mining. And notably, in Mexico, people want to make sure you're taking care of the community. So there we go. Each individual asset, as we went through before, has a lot of detail. So if you want to find out more, I would encourage you to go to the website, which again, I will leave a link for you in the description. Their flagship asset is going to be looking for it right here, the Ana Paula project. So initial capex is going to be 300 million. It's an underground mine. They own it 100%, and the cash operating cost is just over 700 at $709 per ounce, and then the all-in sustainability cost is just over 1,000 at $1,011. They purchased in 2023, as we mentioned before, 84-person camp, service rights, ownership, strong local support, and 412-meter long underground decline, electrical grid connection. 25,000 meters are currently drilled, focused on upgrading inferred resources and testing resource growth targeted completion. And in November of 2025, they received their PEA, which shows exceptional economics, and their feasibility study is on track for the first half of 2027, targeting commercial production by 2028. So we talked about the highlights, and we can see here that there's 101,000 ounces of gold, which are currently in their production roadmap ramp up. And the after-tax net present value is $426 million. That's their base case. And their IRR, or internal rate of return, is 51.3%. So when I'm looking at this, something sticks out to me. Their market cap right now is at $438 million, where they are a profitable company. That's why they get a PE. And this one mine appears like it's worth roughly what the company is at right now. So that's pretty good. Their base case, it looks like they're also assuming $2,400 an ounce. So anything higher than that would be extra cream on the top. And finally, looks like they had some news here in terms of on June 18th, they told us that Heliostar is set to expand the La Colorado with strong drill results and key permits. So this just means that the company is making advancements, and ultimately, that means the company appears like they are making more progress, just as we saw on their most recent financial report for Q1 of 2026. So at a high level, that was Heliostar Metals, which is currently a profitable company looking to roughly 10x their production between now and the end of the decade. Thank you very much for tuning in. I'll see you on the next video.